Hey everyone, today we'll share with you one strategy that covers most of the market that we can trade profitably. Let's go! Not analyze real trades, but we'll review the kind of strategy that we'll be using. Now, okay, we will start by understanding the market structure of the charts. So let's say the charts is presented to us in this direction: up, down, up, down, up, down, up, down, up, down, and then some ripple here. Okay, some ripple here. All right. Now, in this case, the overall direction is everywhere. Exactly, it's going up. Wow, you are awesome. Okay, so the overall direction is going up. So in this case, it's very simple. We understand the overall direction is going up. The chances of us winning in this trade will be higher when we buy than compared to sell. But it doesn't mean that we cannot sell because there's no all the way straight up or all the way straight down, right? But in this market structure, it's higher chance that we want to prefer to buy. Okay, now at which point, now this is a challenge, at which point are we buying? Okay, this is where we need to map out what is the resistance and support. All right, so let's say it's over here, which is very congruent. It goes up, comes down, touches, goes up again, comes down, touches, goes up again, comes down, touches, and go all the way out thereafter. Okay, now in this case, let's say we are looking at, okay, let me plot it out. Okay, let's say we are looking at around right here, right? Now, does it break up and then we buy? No, we prefer to buy when it touches and goes into the support zone. In this case, this is a support. So when it goes below here at the support, okay, then we consider to buy. Now you may ask Brother Lucas this question: why do I buy when it's a falling knife? You're catching a knife, right? Okay, now the question is very well asked. So the issue of how we are dealing with this is very simple, right? When it keep falling down, one thing we will watch whether there's a news in that particular timing. So if there's news in that particular timing which might change the whole direction all the way down, all the way up, then we will assess based on the news. All right, we will not really care about this support and resistance, right? But if there's no news, it's just normal days, okay, then this support and resistance will be very important for us to look at, because it's just normal. There's no major news to change the direction, right? So if it's very important, then the moment it touches, you can behave two ways. The first is a very aggressive way. Okay, no, I can't tell you how you're going to behave because that is you. You have to be very comfortable in the way that you are trading. So you may behave, okay, then it reaches, buy. Okay, then the market may be buy. Okay, that's a very aggressive way. Now, the conservative approach is when it reaches there, you will step back, be alert, look at M5 to see whether it will just bounce from there and it doesn't just fall off the cliff. If it just bounce from there, okay, you say you take a walk, come back 15 minutes, come back 20 minutes, it's still bouncing from there, then that will be a very good chance, okay, that you want to take the trade. So in this case, then the stop loss will be just below, okay, below the support in this case. Now the next question is, how many pips below the support? Okay, now usually we trade like H4. Wow, this is really Picasso style, okay, or day one. So it's usually in the range of 50, 60 or 100 pips, okay, right? If you want to have a tighter stop loss, as long as it's just below the support, then that is something that you want to consider. Give you some rooms to breathe. My usual is usually about 60, 70, 100, 130, so about there. So I will control my risk about 1 or 2%. So that's usually how I determine my trades. So in this case, when you buy, or this is where the market decided to give you your reward. Okay, in this case, it's going up, it's going up, it's going down, and then it's going up, right? So usually we want to take the trade where there's a good risk reward structure of 1:1 or 1:1.5. Okay, 1 to 1 or 1 to 1.5 in this case, right? Well, sometimes I will not just restrict myself to 1 to 1, 1 to 1, 1 to 5, because the market is a very fluid and very be like water style. Okay, be like water style. So if the market decided to give me a lot more, 1.2, 1.3, of course I will accept. So in this case, right, like in this case, if you trace this hypothetical understanding, it goes up, it comes down. As long as the market structure doesn't break below the previous low, then it means that you still have a good chance to keep going up. Then it just go up, comes down, it doesn't break the previous high, okay, or it just maintain, it's fine. If it breaks the previous high, I will take some of the profit off the table, just take some money off the table, right? Or it drops a bit here, you know, take like 0.01, 0.05, take some profit. So every peak it drops down a bit, you may want to consider take some profit, okay, take some profit. If it goes all the way below the previous high, before the previous low, then that's where I want to be totally out of the market. So this is one understanding that you may want to consider adopting, right? Other than that, you just ride through the market as long as if the whole market structure is still going up, because you can check your previous chart, right? What sort of strong support resistance in the next level that you can take. If in the next level there's still a lot of rooms, like 300 pips, and you're just taking 60 pips here, and then it's 300 pips is 1 to 5, then you can ride all the way to the previous resistance, which is about 1 to 5, right? Just that you need to ride through this emotion, right? So how do you ride through this emotion? Then this is the way that I'm sharing with you. You may consider take some profits when you fall off a certain cliff. So in this case, it will be much clearer. Okay, you get it? Now it's very clear, right? I shouted at the mic, it become more clear. Now this is on the buy side, right? Buy side, right? If you want to consider to buy. Now let us also look at the sell side so that we can cover two areas. Now the market structure of the sell side is what? The market structure of a sell side is, okay, it goes up, it cannot go up, it drops, and it drops. It tries to goes up again, it doesn't go above the previous high, it drops again, and then it goes up, it drops, and then it goes up, it drops again, and it just continues, right? Okay, now it's very clear. In this case, we want to find the resistance. So most likely this will be the resistance. Right? Okay, this will be a very good resistance because it drops below, it goes up, it comes down, it drops. Okay, so usually in this case, I will take the half line. Okay, Picasso style. Okay, half line. So then it drops, it goes up, it drops, and then it goes up. Okay, around here, which we may consider to sell. Okay, now because here we don't know yet, let's say the resistance and the chart that presented to us is only within this segment. So over here you see dropping, and then it goes up. Okay, right? Let's say you don't know this is without the market structure that is formed previously. Let's say you're not really sure this is the support, right? Support. Okay, wow, this is really good drawing. Support. Now this is sell. But in this case, it's much clearer, right? This is so much clearer that it already formed, right? Then it goes up again, you want to sell, right? Because this is so much clearer that it doesn't goes above the previous high here, okay? And then it just breaks down, right? You don't know whether how further you will drop, but the moment it retraces and goes back into this zone, all right, the half or all the way here, depends on you, then you can sell, right? In this sell, you want to take the stop loss above the support region or above the previous high. Right, it's very simple. So over here, this is the stop loss you can choose, which is usually in the range of 60 pips and above, because we are looking at H4, we are looking at day 1, right? So if the market decided that you want to give us profit, then it's either we want to strictly give ourselves 1-to-1 or 1-to-1.5, right? I'm not really very strict in terms of when market is giving me the profits, because sometimes the market will go all the way down. Okay, let me do some drawing. Okay, I'm really getting very good in drawing right now. Okay, now let's use purple. So let's say the market is very good, it goes all the way down, right? In this case, unless it keep going up, it goes above the previous high, I will not wait for until stop loss. I may even consider to just cut it off with very little or break even, because the market structure has already changed, right? But if it doesn't goes above my previous high, it just keep going, all right? It just keep going down. It tries to retrace, but it doesn't really go all the way out. It retraces again. Either I take some profit over here, or sometimes I'll just let it roll, right? So you need to really feel it by yourself, by applying this experience over and over again, and also looking at the market as a whole. And of course, watch more of Brother Lucas' video where he will trade live to share with you how he really take losses or how he just ride the trade through, right? So this is the usual strategy that covers most of the market behavior, where it's really useful. And it's because we are trading at major support and resistance, right? No, this is not a support, this is a resistance. Okay, well, I know you are really sharp. Okay, this is a resistance, right? A support resistance are mostly the same thing, so we can call it SR, right? So because we are trading at major support or resistance, the risk of what we are facing is much lesser, because we are getting where price is at the certain inflation point, where it's like at the cliff, either it fall off or it will just rebound. Okay, like if you throw a ping pong ball from the sky, the chances are on the floor it will bounce up. So this is a support. If you throw a ping pong ball above the ceiling, throw it up, chances are it's going to bounce down, right? But there are situations where your ceiling is not hard enough or the floor is not hard enough, then what? Then you just break through. There are chances like that. Then when you break through, just take the loss, look for another trade. There's more than 20 currency pairs for you to trade. So there's no need to just fall in love with one particular trade. Okay, so this is one strategy that covers most of the market behavior and structure. Remember to click like and subscribe, like, so that in the next video I could cover more in detail, that you can use this understanding apply to a chart. Okay, give me at least 5 likes. All right, 5 likes. Let's go.